So let's call this trade friction or trade disharmony, if you will. How does it impact your business?
Well, from our business perspective, Steve, it actually doesn't have that much impact. We're a supplier of iron ore to China, and we supply roughly 170 million tonnes a year. And China imports about 1 billion tonnes of iron ore, and that produces just over 830 million tonnes of steel. Of that steel production, only about 1 million tonnes is exported to the US. So most of it is actually consumed domestically. And with all the initiatives we're talking about here at the Boao Forum around the One Belt, One Road initiative, what we're actually seeing is that demand for steel in China is staying very strong. So we don't think the tariffs, given the very small amount that's actually exported to the US, is going to have much impact on our business in the demand for iron ore.
But the reverberations in the global economy will have some sort of effect, obviously. Perhaps Australia will be exempted on those steel tariffs, as will South Korea, but China is going to be in the crosshairs. Some of the mills there are under profitability constraints right now. And even Malcolm Turnbull has said trade wars, in his word, is a race to the bottom. You will feel it.
Look, I think there's potential for that, and we're obviously, like you, we're very interested to see what President Xi Jinping says tomorrow in his speech here at Boao Forum. That's going to be absolutely key to us, and we will take some indicators from that. Steel mill actual profitability is very high at the moment. It's actually production that's been under some restrictions in this winter period to actually improve the environment and the emission control. We've had this production cut over the winter period. We're coming out of that now. Steel mills are actually very profitable. They are chasing this demand there for iron ore and for steel. So at the moment we're seeing the fundamentals are strong. I think I would agree with our Prime Minister Malcolm Turnbull in that I don't think trade wars over a long period of time are conducive to long-term world growth.
How do you see prices going? I know Fortescue generally doesn't talk about specific price targets, but you can kind of give an idea of where the supply and demand is. I know recently you did ratchet down for the second time in 6 months the price target or forecast that you see. And you mentioned about the end of the restrictions in the wintertime. What we've seen over the last couple of years is that spread between high grade and lower grade ore really widen. But are you expecting that to come back down to benefit lower grade producers such as yourself?
We do. We still see the market as being cyclical. And we've seen one of the drivers at the moment for that spread between the higher grade and the lower grade ores has actually been the high profitability of the Chinese steel mills. Our view, and we're hearing this from our customers, that as that profitability comes under pressure, they will be chasing the very high value in use. So the 58 grade ore is high value in use. The demand for our product has continued, but we think actually what will happen is the price spread will narrow. And we've already seen the premium for the 65 grade product. It peaked at about a 40% premium to the Platts 62 index. We've seen that almost halve in the last couple of months, in line with the moderation in those steel mill profitability.
So what's going on, though, with supply? Some of the Chinese ports have excess supplies. Also, Port Hedland, I was looking at some of the March numbers. I think the highest supply or the throughput in forever in March. So you're cranking.
Yeah, look, March was a big month for Port Hedland. Not unusual, because what we normally see at this time of year, seasonally in the Pilbara, is that this is our wettest period and we can have cyclones. So actually we had a fairly moderate cyclone season in the Pilbara. So not surprisingly, March compared to other March in the past has probably been quite high. So I think that's just more of a seasonality issue. Reality is that most of the producers, ourselves included, are not actually looking to grow supply of iron ore into China. We've kept our annual target at 170 million tonnes. So the market is very well supplied, and I think the build-up of inventory at the ports is an indication of that. So nobody is looking at adding new supply into the market. I think we're just seeing some seasonality coming through in those port levels.
How do you see that demand, though, going forward? I know you're not saying right immediately the tariffs potentially affecting you, but if we go down the road, are we heading towards a dark winter of protectionism that you see?
Well, look, I think there's still a lot of ongoing dialogue. There's been, as recently as today, there's been a tweet from President Trump saying, China is still a very long-term and valued friend and partner. I think there is an understanding that we don't want to see a period of prolonged trade wars. No doubt there's going to be some protectionism coming into some of these tariffs, but I do think that there is a broader sense that there should be a common sense approach to the world trade. I mean, World Trade Organisation has done a great job over the last number of decades, and I think more broadly, I think there is an understanding that that is a positive for the globe more broadly.
I want to get your reaction. Today, Australia's Department of Industry, Innovation and Science gave a mixed outlook for iron ore, raising near-term price forecasts, but also says China's imports are set to level off a bit. Are you seeing the same thing? You're a pure China play and you're a pure iron ore play.
Yeah. No, look, we're seeing that demand is still very strong. And as I mentioned before, our view is that steel production will remain at roughly the same levels. I don't think we're anticipating we're going to see a big increase in steel production. Yeah. So in that respect, it will stay relatively flat. We think actually there's quite a bit of discipline amongst the iron ore producers about how much supply to put into that market. So from our perspective, we're seeing it at current levels. We're not seeing that necessarily taper off. And even that chart was fairly modest declines.
Fairly modest decline.
And when it comes to the price predictions, clearly it's difficult to predict the price. Yeah. And that data is actually used by our Treasury for their budget purposes. So I think for that reason it tends to be relatively conservative. We don't tend to predict the iron ore price.
I know Andrew Forrest well, and he never gives me a price.